Tuesday, September 15th, 2020, Maneco 64, home of alternative economics and contrarian views. Today I'm going to talk about how the dollar collapse can only be against gold and not against the other fiat currencies, and how all the other fiat currencies are going to collapse as well versus gold. And by collapse, I mean they're going to lose a lot of value, and it's going to be reflected, of course, in the gold price. It will be reflected a few years down the line from that surge in gold in the purchasing power of all the fiat currencies. I get a lot of questions from viewers. Well, how will the British pound do when the dollar collapses? How will the euro or the Canadian dollar? Well, they're all going to do just as bad. And the major reason for that is that the dollar is still at the center of the monetary or currency system. And it started becoming so during World War One. And this is what Smedley Butler says here about World War One and what happened to the American economy and to American business. He says, out of war, a few people make huge fortunes. In the World War One period, a mere handful garnered the profits of the conflict. At least 21,000 new millionaires and billionaires were made in the United States during the World War. So America did very well from World War One. It only fought for a year, and prior to that, it was selling billions and billions in munitions and material, everything you could think of, to the Europeans. And it ruined Europe, of course. And by 1944, when Bretton Woods came about, America held most of the world's gold, so the dollar became the center of the gold exchange system, the Bretton Woods system. It wasn't a classical gold standard because all the currencies around the dollar is at the center, and it still is today. They were not backed by gold, but the dollar was. They were fixed, of course, at a fixed exchange rate to the dollar. And that's why they're all dependent on the dollar. Even today, they are a derivative of the dollar. So one example I would give, we've been following up until recently how all the major fiat currencies had made new lows, or gold had made a new high versus them. Well, a new all-time high since the high in 2011. All of them. And the last one that was left to make an all-time low versus gold was the dollar, and we did that. So that's confirmed that they're all gonna sink, and it's all gonna be versus gold. So don't think that you can hedge your dollar exposure with British pounds, with euros, with Swedish krona, or any other paper currency. Don't think they will save you from the collapse of the dollar. All of the fiat currencies are going to collapse. It will be a global synchronized collapse, so to speak. Yes, we do see fluctuations amongst the fiat currencies. Some will sink faster during a period, and others will sink faster during a period. We've seen the dollar has had a tough time since March, but they're all gonna go the way of the dodo bird, so to speak. So that's what I wanted to say. The only hedge really versus currency collapse or dollar collapse is precious metals, gold and silver as well. So with that, let's quickly look at where the markets are. It's 8:30 a.m. London. We've got spot gold at 1964.50. That's up just under $9 or 0.5%. High's been 1969 and the low 1955. So it looks like the precious metals are trying to break out of that consolidation that we've had for, well, over a month now. I think we're about to break out. We'll have to wait and see what the trigger will be. It could be the FOMC meeting, which starts today and ends tomorrow, the Federal Reserve's Open Market Committee, of course. Spot silver is up 27 cents or 1% at 27.36. High's been 27.54, low 27.10. The Dow futures up 93 or 1/3%. S&P is up 1/4%, 33.92. Nasdaq 100 future is up just under 0.5%. The other fiat currencies, well, we've got sterling up 0.1 at 128.60. The euro is up 0.2% versus the dollar at 118.92. And the dollar is down slightly versus the yen at 105.66. Dollar yuan down 1/3% at 678. WTI crude is at 37.38, down 0.2. And the 10-year yield is virtually unchanged. It's at 0.667, exactly where it was yesterday when I made this video. So there you go. If I had a lot of fiat currency exposure, and by that I mean money in the bank, money in a savings account, or in a money market fund, wherever it might be, I would personally try to hedge myself by exchanging quite a bit of that into precious metals. That's up to the individual to do that. The worst that could happen if you exchange some of your fiat for precious metals is that the system doesn't implode, that central banks get religion, start raising interest rates, start unwinding their balance sheets, and then the currencies pick up versus gold. But do you think that's likely? I don't think so, especially with all the debt that's been created nowadays. So that's what would happen then. In a currency or dollar collapse, all the fiat currencies would collapse. And by collapse, of course, I mean they would lose a lot of purchasing power versus real things. And that would be first reflected versus gold. And then down the line, it takes a little time for that to be reflected. And that will be the inflation. It could even morph into a hyperinflation. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to the channel if you haven't yet. And you can also follow me on Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.